Good afternoon. My name is Regina Hopkins, and I'm with the DC Bar Pro Bono Center, and I'd like to welcome you to our webinar this afternoon called Wanting to Do Good, a webinar about the requirements and pitfalls when starting a nonprofit in DC. If you look at the interface, the GoToWebinar interface, you'll see there are two handouts. One is a copy of the slides for today's presentation, and the second is a booklet that we have developed called Starting a Nonprofit, a Guide that you can use that will provide more detailed information on some of the points we'll be talking about today. Feel free to download either of these and make use of them. And with that, we'll get started. There is a question box for you to ask questions, and I will pause from time to time to answer them. So please feel free to type in your questions, and we will try to get the information to you. So with that, we will start. So first, the DC Bar Pro Bono Center is an independent 501c3 organization that's affiliated with the DC Bar, and we are funded by the voluntary contribution of DC Bar members. We match nonprofit organizations with pro bono legal counsel. Last year, we matched 69 nonprofits with pro bono counsel. They can help with different types of legal issues such as corporate governance, IRS compliance, employment law, real estate, intellectual property, whatever issues that come up in your operation of your nonprofit. We also host policy clinics. These are policies that are designed to address specific issues such as making sure you have good governance policies, or do you have intellectual property or risk management needs. So we have those clinics from time to time. And we also sponsor trainings on important legal topics and provide written materials on our website. And that's the link lawhelp.org/DC/CED. So like the guide to starting a nonprofit in DC is hosted on our Law Help page. And trainings like this are also archived. And so you can go back and look at them. And as I said, we provide trainings like we do today. So what's today's webinar going to be about? Well, it's going to be about starting a nonprofit in DC. So the first question that we'll discuss is, do you want to form a 501c3 organization? That's a particular type of requirements under the Internal Revenue Code. We'll go through those. We'll talk about the DC requirements for nonprofit organizations and what it takes to be a tax-exempt 501c3 organization, and just what the nuts and bolts of the process is, what you have to go through to actually get exempt status. So, do you want to form a Section 501c3 organization? First off, you have to understand that Section 501, everybody thinks of it as a tax-exempt organization, and a 501c3 organization is exempt. But there are many types of exempt organizations under the Section 501 of the Internal Revenue Code. They include civic organizations, trade unions, business leagues, social clubs, political parties, many others. In total, there are over 25, around 30 different types of tax-exempt organizations under the Internal Revenue Code, of which 501c3s are only one of them. And they have some unique characteristics that differentiate them from the other tax-exempt organizations. Basically, 501c3 gives tax-exempt status to a certain type of nonprofit, and that's organizations that are organized and operated exclusively for religious, educational, charitable, scientific, testing for public safety, or literary purposes. They also can foster national or international amateur sports competition and for the prevention of cruelty to children or animals. And those are what are known in the Internal Revenue Code as exempt purposes. And so, you know, the ASPCA is exempt under this provision. The U.S. Olympic Committee is exempt as a tax-exempt organization. You may not realize it, but most bowl games, the Rose Bowl, the Sugar Bowl, things like that, are exempt under 501c3. But the vast majority of exempt organizations, and I mean like hundreds of thousands of them, are either religious, educational, charitable, or scientific. And for most of the people that are probably on this call, it's going to be a charitable organization, meaning that you're doing something to benefit either people in need in your community. And so you have to be operated for one of those exempt purposes. And this is the important rule that you have to keep in mind, or the important advantage of a 501c3. They have an advantage that almost no other exempt organization has, and that is contributions to the organizations are deductible by the donor under Section 170 of the Internal Revenue Code. That's what makes 501c3 organizations unique. You can give money to a business league. You can give money to a political party, and you cannot claim a tax deduction. But if you give money to, say, Bread for the City or the United Way or to your local college or your college or university, then you can claim a tax deduction. And that's the important distinction between 501c3s and all the other tax-exempt entities. In order to receive this additional benefit of the tax deduction, the IRS imposes certain additional requirements on the nonprofit organization so that they get this benefit. So before you even start, you have to decide, can you satisfy these additional requirements? And we'll talk about them in more detail a little bit later, but I'm going to explain two of the chief ones that people sometimes get tripped up with. The first is you cannot intervene on behalf of or against a political candidate for office if you want to be a C3 organization. So you can't endorse a candidate, you can't endorse a political party, you can't do things that are almost an endorsement but not just short of an endorsement if they indicate that you have a preference for a particular candidate, like giving grades out for particular candidates. You know, they get an A on the environment and somebody else gets a C. That is not permitted to C3 organizations. They're supposed to be apolitical in this regard. And so if that's part of what you want to do as your mission, you should not try to be a C3 organization because you're not going to meet the requirements. Similarly, C3 organizations, charitable organizations, are restricted in the amount of lobbying they can do. So if part of your mission is to engage in a lot of advocacy for legislative action, then you will not meet the requirements of a 501c3 organization, and so you may want to do something else. There are other types of tax-exempt entities that can do more lobbying, but C3, with the benefit of the tax deduction, again, is restricted. The idea is that these are, because you're getting, in effect, a tax subsidy through the deduction. So if I'm a donor and I give $10 to a political party, that $10 is all my money. But if I give $10 to a charity and I get a tax deduction, well, maybe $8 is my money and $2 is the general funds of everybody because I've gotten the tax deduction. And so the idea is, because everybody is sort of sharing in the subsidy of your charitable contribution through the tax deduction, it should not be it should be more apolitical. And so that's the idea. And so if you remember a few years ago, the whole problem with the IRS and the Tea Party is that a lot of them wanted to do, we're trying to file as a 501c3, but there were real questions about whether they wanted to lobby and whether they wanted to endorse candidates. And and so that was the back and forth between them and the IRS about that. And so that's the real question. There are, as I said, other entities that you can form that are tax exempt under the Internal Revenue Code, but your donors are not going to get the tax deduction. So the first question to ask about whether you want to be a 501c3 is, can you live with the restrictions? The other is, are you filling a need in your community that's not being addressed by another organization? And the reason is every organization has overhead. You have to pay rent, you have to pay salaries, insurance, accounting fees. All of this must be paid out of charitable contributions. So the question is, are you being duplicative of what other organizations are doing, or are you doing something that is a need that's not being addressed, or are you doing it in a way that that a different methodology that's not being currently used out there, that it's enough to justify the overhead. I had just got an email from someone who wants to set up a scholarship fund for a school that this person went to. And so they were thinking, should I set up a 501c3 organization? Well, maybe this person should, but the other question is maybe they just need to donate the money to the school and have the school set it aside as a scholarship fund. You may not need the extra overhead and compliance requirements in order to set up that scholarship fund. So you think about that. Can you do it through an existing organization? Another alternative to a 501c3 organization is what's known as a fiscal sponsor. A fiscal sponsor is an existing 501c3 organization whose mission is actually to serve as an incubator for other startup nonprofits. And for a fee, typically a percentage of the donations, the fiscal sponsor will provide the accounting, tax filing, and other compliance services to the startup. And the startup is allowed to just focus only on the mission work. If their mission is to work with kids, they don't have to spend money hiring an accountant or worrying about their tax filings. They just take advantage of the existing 501c3 organization's infrastructure, and they focus completely on the program for their beneficiaries. That's all they have to do. They don't have to worry about the bookkeeping or all that stuff. And because the fiscal sponsor is already an existing 501c3 organization, once they enter into the fiscal sponsorship agreement, the donations are immediately tax deductible because they're made in the name of the sponsor organization for the benefit of the startup. And so that has there's less lead time needed in order to do this. And it allows organizations at a very low risk to them to develop a track record with respect to their program and before they file for tax-exempt status or approach funders. It's a way to sort of demonstrate that your organization has vitality and a purpose in a sort of very low barrier way. There is a website. Let me see how I do this. I'm going to do this. Excuse me. There is a website called the Fiscal Sponsorship Directory. And there's a hyperlink in the PowerPoint that lists all the different fiscal sponsors out there. You can select it by state or province, like where you are. You see there's the District of Columbia. And also by category, like are you into economic development or faith-based religious or mental health. So there are fiscal sponsors that are aligned to your mission, and you can go to this website and see them. There is also a great website on the Foundation Center's website called GrantSpace, and they have a lot of information about fiscal sponsors, about what they are, what's typical to see, and things like that. And so that's a great resource as well if you want to go the fiscal sponsor route. Okay. Now, we'll talk a little bit about setting up a nonprofit in DC. The first thing you have to do is you have to form an organization under DC law in order to have a tax-exempt entity. And under the Internal Revenue Code, a 501c3 nonprofit can be a corporation, a trust, an LLC, or an unincorporated nonprofit association. So there's a lot of choices of types of entities you could use. However, they're almost always formed as a nonprofit corporation. And there's a couple of reasons for that. The first is that it provides the maximum amount of protection from legal liability for officers, directors, employees, and volunteers. What you don't want someone to happen is someone volunteers as a director for your organization and then they get sued. And the DC Nonprofit Code has a lot of legal protections. Nonprofit Corporation Code has a lot of legal protections built in for people who volunteer to be on boards and things like that. It's also the more efficient governance structure when you want to operate outside of DC. For example, Maryland and Virginia, if you're going to do something in the tri-state area, You want to have a legal entity that is fully recognized by the jurisdictions where you're operating, instead of like running into issues about whether you have the same level of protection from liability as you would under DC law. So, so we're going to operate on the premise that you'll form a nonprofit organization. It's pretty straightforward, and the compliance, there isn't that much in terms of compliance. So it's just a really good. It's probably the easiest form in terms of liability. And they are governed by the DC Nonprofit Corporation Act. Persons called incorporators form a nonprofit organization by filing articles of incorporation with the DC Department of Consumer and Regulatory Affairs. So you have to have what's called articles of incorporation. People sign the paperwork, and they file it with the DC government. And an incorporator can be an individual, it can be another nonprofit. Oftentimes nonprofits will set up a subsidiary, a 501c3 organization for a particular type of purpose. But in most startups, when you're just starting something, the incorporators are typically individuals. And under DC law, you only need one incorporator. So what these articles of incorporation, what needs to be included? Very little from a DC law purpose. You have to have the name of the organization, pick a name that you're going to have, who's what's called your initial registered agent, and their address in DC. The registered agent is someone that the DC government contacts if they have legal notices to give you, and you have to designate who that person is. A statement that the corporation was formed under the DC Nonprofit Corporation Act. The name and address of each incorporator. It's got to be a street address. The person doesn't have to be in DC, but they do have to have a street address. And the incorporator has to sign the articles of incorporation. And then whether the corporation will have members. And we'll take a second to talk about what members are. So nonprofit corporations, unlike for-profits, don't have shareholders. By definition, nobody owns a nonprofit. But there was a time, and it was probably more popular, like say 40 years ago, to have what were called members. And they were essentially the nonprofit equivalent of shareholders. Members do not receive dividends or have any other ownership rights in the nonprofit, but they do have the right to elect the board, the members to the board, and approve major corporate transactions such as mergers or transfers. And so they exercise they're the sort of the public exercising a governance function over the board of directors of the nonprofit organization. And like shareholders, they have a right to attend meetings, receive notice, have access to information about the nonprofit, and they get to vote. And so there is built into the DC nonprofit code a lot of legal requirements if you're going to be a membership organization. You have to have an annual meeting. You have to set a date as of which members are determined who are eligible to vote. You have to send out the notice. You have to have records available of all your membership lists so that members can communicate with each other. So if I'm a member of your organization, I have a right to ask for the list so I can write to the other members and say, throw those bums on the board out, sort of thing. So there is more compliance, a significant uptick in terms of the compliance requirements for membership organizations. And a lot of people make mistakes and get it wrong. So that's why I think the vast majority of practitioners in this area may say to you, they don't normally recommend having a membership organization because they think that it's more problematic and from a legal compliance point of view than it's worth. I should point out that a lot of people say they have members, but really don't. The perfect example is NPR. You're a member of NPR. Well, when was the last time anybody asked you to vote on the board of directors? They don't, because it's an honorary title. And the DC Nonprofit Code makes it clear that you can call people members all you want, but if they don't have the right to vote on major corporate matters, then they don't meet statutory definition of membership. So you can ask people to make annual contributions. You can ask them to contribute, and you can give them some of the rights of members, but you don't necessarily have to meet the legal definition of members, and that's the issue that comes up. Okay. So in the Articles of Incorporation, you have to say, are we going to have voting members or not? And if the answer, if you don't want to go through the hurdles of having a voting membership, then you check no. There are other things that the Articles of Incorporation can include, like the names of the initial board of directors, and for purposes of the DC law, you have to have at least 3 directors. You cannot have just 1 director of a nonprofit. If you're going to have members, you can, but aren't required to list the initial members. You will have to include, it's not required by DC law, but the Internal Revenue Code will require you, in order to get tax-exempt status, to include certain language in the Articles of Incorporation, and we'll explain that in a little bit. You can put a provision in for the indemnification of directors. We'll talk a little bit about that later, but what that basically means is that if a director is sued, they get reimbursed by the corporation for their expenses. And then you can put in any provision that is not inconsistent with DC law, like why you're forming the nonprofit, how you're going to structure the management, like when the powers of the corporation and the board, and whether you have any rights or limitations on membership. Now, all that being said, it's probably better to put the details about the management of the organization, like how many directors you're going to have and how often they're going to meet and things like that, in your bylaws and not in your Articles of Incorporation. And that's because the Articles of Incorporation are a public document. They're filed with the DC Department of Consumer and Regulatory Affairs, and they're open to public inspection. And every time you want to amend it, you have to file the amendment, and you have to pay $80. So to the extent that you can put things in your bylaws, that's generally considered to be a better way to do it, because that's an internal document. It's not filed with DCRA. You don't have a filing fee, and it's much, much easier to amend it. So that's the way we would recommend you do it. And let me just show you some sample Articles of Incorporation. This is a sample we developed, and you'll see that it's pretty short. For our purpose, it's very helpful organization. The period of you want to say that the corporation is formed for perpetual duration, meaning it exists until you decide it doesn't. You can put the charitable purposes. You can put that whether they will or will not have members. You'll put the manner of selecting the boards of director will be in the bylaws. You'll authorize the formation of bylaws, and then you'll put in some language again from the Internal Revenue Code, and a few things like what happens if the organization is dissolved, and that's basically it. They're only about 3 pages long. They're pretty short, and so that's a way to do it. So again, the samples, if you click on the hyperlink, you'll get the samples. Okay. Now, under DC law, charitable organizations receive special protections. We talked about that, from director liability. And basically, a charitable organization under DC law is anything that would get you an exempt purpose under 501c3. So they do exist in that way. Before we get to what the IRS requires in this regard, I will check some of the questions. Someone asked whether the PowerPoint would be emailed out. It is there on the, if there's a section called handouts, you can download it from there. So that's it. Okay? All right. So the Internal Revenue Code requires that a nonprofit be organized and operated. It's not just to be organized, but you have to continually operate on the basis exclusively for an exempt purpose. And so therefore, your Articles of Incorporation must specify that if the powers of the organization are limited to one or more exempt purposes as specified in the code, and that the organization cannot engage in any activity that's not permitted by 501c3. And the IRS has very specific language that they want you to include. And when they're reviewing your exempt status, the application for exempt status, they will look for this language. And in fact, the Form 1023 says on what page and in what paragraph is this language. They want you to point it out there. So here's the sample language that has to be in. The corporation is organized exclusively for charitable, religious, educational, and scientific purposes under 501c3 of the Internal Revenue Code or any corresponding section of future federal tax codes. You can list something more specific as well. You can say we're organized for the benefit of aiding the homeless, or providing care to children, or for purposes of dealing with mental health issues in the community, and any other purpose that is charitable, religious, educational, and scientific purposes under 501c3 of the code. You generally want to have, basically, because the Articles of Incorporation have to be amended by filing an Article of Amendment with the DC government, you want to say that it is organized for as broad a purposes as you can legally under 501c3 of the code. The other thing the IRS wants to see is that the assets are permanently dedicated to a tax-exempt purpose. The idea is that for the trade-off for getting the tax deduction is that there is no possibility that the organization's assets will ever be used for a non-exempt purpose. And so you have to include in your articles a provision that says upon dissolution of the corporation, the assets will be transferred to either another 501c3 or to a state or local government for a public purpose. And that's the provision. Once they're in your organization, they can only be used for an exempt purpose. And if for any reason you dissolve your organization, they have to be transferred to another entity. And then the IRS also, if this is not required, but the IRS likes to see it anyway, in your articles, a provision that says no part of the earnings of the corporation will be used for purposes of private individuals, with the exception that you can pay reasonable compensation for services so that your CEO or somebody else can, if they provide services to the organization, you can compensate them. And again, the other part is no substantial part of the activities can be used for carrying out propaganda or attempting to influence legislation, and that there's no political activity. So those that we talked about those in the beginning, the IRS likes to see those language in the articles as well. So you set up the corporation by filing 2 copies with DCRA along with their Form DNP-1. There's an $80 filing fee. You can file online or by mail. Or if you want expedited service, you can file in person, but there's a $100 fee. And so now you do that, you're up and running for purposes of the DC government. The next step you want to do is you want to set your bylaws, and they govern your internal operations, and they include provisions relating to the appointment of members, if any, the meeting of members, if you have them. They'll also, and importantly, specify the number of directors, how many people are on your board of directors, and how and when they are elected. Your board meetings, how often are they held, and how much notice do you have to give? How do you appoint officers? Are you going to have committees of your board? Are you going to indemnify officers and directors against liability in case they are sued for any reason because of their service as officers or directors? And then finally, how to amend your bylaws. Okay, so you've formed your articles of incorporation. You are now a legal entity. You have your bylaws. What's the next step? Well, you have to start becoming, you're now a nonprofit organization. Now you want to be a tax-exempt nonprofit organization under 501c3. So you've left DC government behind, and you're going to have to transition to meeting the requirements of the Internal Revenue Code. Well, the first thing you have to do is you have to let the IRS know you exist. And you do that by getting what's known as an employer identification number or a tax ID number, just like individuals have Social Security numbers. And you do that by filing IRS Form SS4. You can file it online through the IRS website. You can actually get your number by telephone. There's no filing fee. You can get it like right away. And so you file that. You just ask the IRS for your EIN. And then you can file your application for exempt status. And there are two different forms. The first, I'll go through this, is the 1023 application. This is the main form. You can file it online or in paper form, in which you ask for recognition under 501c3 of the code. And part one is just who are you, name, address, who's the primary contact, etc. Do you have a website, things like that. Part two asks, are you a corporation, a trust, unincorporated association, what is your structure? Part three is where they ask you, do you have the language that we just talked about? Do you have the language that says that your purposes are limited to charitable purposes? And do you have a provision that assets will be used exclusively for those purposes? And do you have the language that if you are dissolved for any, you wind up your affairs and go out of business, that the assets will be transferred to an appropriate entity? And so that's the action. Now, part four asks for a narrative description of your activities. What do you plan to do? Let me just go back to the PowerPoint here. And basically, the way it works is the IRS makes a determination about whether you meet the requirements of the Internal Revenue Code based on your description of what you propose to do. So if you say, I want to run an after-school program, they'll look at how you plan to operate, that you want to do this, and this is how you plan to operate. And they will say, yes, that meets the requirements of the 501c3, and you are a tax-exempt charity. But let's suppose in year one you want to operate an after-school program, but in year two you also want to operate a summer camp. If you don't put that in your original application, you're going to then have to notify the IRS that you are going to carry out this additional activity, because they have essentially a second bite at the apple. They have a chance to look at all your new activities and say, yep, that's still within the bandwidth of a 501c3 tax-exempt entity. Or they can say, you want to do that, but that's not a tax-exempt entity, so we may have to pull your tax-exempt status if you're doing that. So, so that's why it makes sense. If you have within, like, say, the next 3 to 5 years, about 3 or 4 activities you want to carry it out, put it in your application now. Don't just put what you're going to do next year. Put in what you're going to do over the next couple of years so that the IRS can let you know up front that they think these activities are okay. Otherwise, like I said, you'll have to file a special set part of your Form 990 to give the IRS the opportunity to review the new activities and then make a determination that it's still consistent with it. And you also have to notify them if you stop doing an activity, because if it's based on representation of what you plan to do, then that's an issue. So, don't be unrealistic, but, don't be narrow in terms of what you're putting in that description of your activities. Now, Part 5 asks for a description of the relationship between officers, directors, and independent contacts. So the IRS is concerned, is there any conflict of interest? Are you really going to use this for charitable purposes, or are you just trying to get wealthy? They also want to know, do you have compensation arrangements in place for anybody? And they want to make sure that you follow the IRS rules, which is basically that if you're paying someone to do work, like an employee, you're paying them fair market value, and the IRS determines that by looking at what do comparable organizations in your area pay for comparable services from comparable people. It's all about, are you paying more than the market for, say, an executive director, or are you paying what the market is? There's some housekeeping questions in Part 6 and 7 about whether you are a successor to another organization. And then the IRS asks for a whole series of questions to make sure that not only are you organized for exempt purpose, but that you plan to operate as an exempt organization. And this is where they ask you specifically about whether you're going to use the assets to benefit insiders, the officers or the directors, and other private interests, as opposed to your public mission. They ask you about participating in campaigns. They ask whether you're going to restrict your lobbying to an insubstantial part of your activities, that you're not going to carry out a trade or business that's not consistent with your exempt purpose. They want to know if you're going to do anything that is illegal or violate public policy. If you're a school in particular, they'll ask you about your admissions criteria to make sure that you're not discriminating. And they will talk about the annual filing requirements, and we'll talk about that later on. So they're going to ask you about those types of things to make sure that you intend to operate in a manner consistent with the Internal Revenue Code. They'll ask you about your fundraising activities. The IRS wants to see that you have a realistic funding plan. And in Part 9, let's see if I can just hyperlink directly through this. Nope, I can't, sorry, but I will. In Part 9, the IRS will ask for financial projections. If you've been operating, say, under a fiscal sponsorship, you can put your prior financial history, but if you're a totally new organization with no prior operations, you're going to have to show that you're going to have to give them at least 3 years financial projections of what you anticipate receiving in terms of grants, membership fees, other revenue, and what you expect to spend your money on. So they want to see some pro forma financial projections and your balance sheet, and basically that's just designed to see that you're a viable organization. Okay, and then finally, Part 10 deals with what's known as the public support test. The IRS 501c3s are divided into two types of entities: private foundations, like the Rockefeller Foundation, the Gates Foundation, the Meyer Foundation, and public charities. And public charities get even better financial treatment in terms of the deductibility of contributions than private foundations. But in order to benefit from that, you have to have at least 1/3 of your contributions have to come from the general public rather than from a few wealthy individuals. So, so they want you to demonstrate that where you expect your income to come from, and if it's going to come from the general public, lots of smaller donations as opposed to, or other contributions from other public charities or the government. Or is it going to come from a handful of individuals? And as I said, how much is deductible by the donor will turn on that. And because private foundations like the Gates Foundation tend to be run by a family, or the Rockefeller Foundation, they have much more restrictions on self-dealing and being able to accumulate funds, or how much they can give to other organizations. So the restrictions on private foundations are much more complex. It's easy to run afoul of them if you don't have a very sophisticated operation. So generally speaking, you always want to be a public charity if you can meet the requirements. And then you get a lot of attachments depending on the type of your mission. If you're a church, you have one. Schools, colleges, universities, we talked about how they have to show they're non-discriminatory. Other types of things, organizations providing scholarships, are you providing actual scholarships as opposed to just benefiting, say, hi, I'm setting up a private foundation. I'm setting up a public charity to pay for the scholarship of my son. You know, they don't want you to do that and get a deduction. So they have criteria that is an open and fair process. So so those are the things. And then you have a checklist that you have to do. You have to send in your articles of incorporation and bylaws. There is a filing fee of $850. It's reduced if you don't expect your gross receipts to exceed $10,000. If you have someone doing this on your behalf, like an attorney, they have to file a power of attorney. So all in all, your packet will probably be anywhere from 20 to 40 pages with all the attachments and everything. And as I said, it will take some time because it is a fairly complex form. If you file the application within 27 months of the date you're incorporated, the exemption, if granted, is retroactive to the date of incorporation. So if you form a corporation, say in July of 2017, provided that you file your application for exemption within October of 2019, you can be tax exempt retroactive to the 27th, to July 2017. If you don't, if you wait too long, then your exemption will only be retroactive to the date you file your application. So you definitely want to be conscious of the 27-month rule. Once you file your application, you'll get either a determination letter or a request for additional information within about 180 days, 6 months. Some people are lucky enough to get the determination letter right off the bat, but most people aren't. They'll get a letter asking for information. And so it's generally 6 to 9 months, but it can take up to a year to get an exemption. So that's a pretty difficult and onerous process for a smaller organization. So the IRS decided they were going to help everybody out by creating the 1023-EZ. Let me go here and show it to you. Just to give you a sense, we're going to go back and look at the whole 1023. So there's page 1, page 2, page 3, page 4, 5, 6, 7, 8, 9, 10, 11, 12. Oh, and did we mention there were attachments and all that? And so you can see it's a lot. And here's the checklist you have to file. It's a lot. So for small organizations, you can file online only the 1023-EZ, okay? And let's see how onerous this is. Page 1, page 2, and page 2.5. So it's a much shorter form. It consists mostly of yes and no questions. You'll see the first thing they want to do is the name of the organization and who are the people who are founding it. Are you going to be a corporation? Are you going to be a trust? What type of form are you going to take? They don't want to see your articles of incorporation. They don't want to see your bylaws. You don't have to point out where all the appropriate language is. They just say, check yes if you have incorporated the appropriate language. And if the answer, and so that's it. They're not going to review it. They do ask you to list the activities that you're going to do. Are you charitable, religious, scientific? And there's a list of codes to sort of more narrowly define whether you're going to be a school versus a medical clinic. And then they ask you a series of yes or no questions. Are you going to try to influence legislation? Do you intend to pay compensation? Do you have any unrelated business income? Are you formed for disaster relief or something like that? They're all yes or no questions. And then they say, do you want to be a public charity? Yes or no? And if so, why do you think you'll meet the test? And then they say, did you once have exempt status and it was revoked? If the answer is no, then don't worry about it. And then you sign the form, and that's it. It's much simpler. Okay. Let me go part about 1023 EZs. That's it. It's very, very simple. So who gets to file these things? Well, you have to be a small organization. And what they mean is that your projected annual gross receipts you do not expect them to exceed $50,000 in any of the next 3 years. And the fair market value of your assets, you don't expect them to exceed $250,000. And in the next, or they do not currently do that. So if you meet those filing thresholds, if you're below those thresholds, then you can form a 1023-EZ. The filing fee is $250, much less, and you can expect a response within 90 days, although typically it's been 2 to 3 weeks. So you form you've set up your nonprofit organization, and you go, great, we only expect to have $10,000, $15,000 a year in the next 3 years. We don't have any assets. We're going to file the 1023-EZ, and probably within a month you will be a tax-exempt entity. And once you're tax-exempt, you're treated like any other entity. There's no further application required. If you all of a sudden start having a $500,000 a year, you're just as exempt as if you had filed the full 1023. So for those organizations that can take advantage of it, it's great. And the reason why the IRS did this is they decided there's a lot of very small community organizations that 1023 form is a real burden for them. And, you just don't have enough money. No one's going to be like getting rich off of a very small nonprofit. So, it was the IRS made the determination it was just too much. They were asking too much from people. So they made this very simple form, and it really has been very helpful for a lot of nonprofits. And if you're and like I said, you should always have a good business plan when you're starting a nonprofit. You should always have an idea of where your money is coming from. And one of the advantages of the 1023 is it does force you to think about those issues because you have to then tell the story to the IRS. But all that being said, if you can file the 1023-EZ, you can take advantage of it. Now, I will say this. There is one thing that we have seen some nonprofits do that gets them into trouble, which is they file a 1023-EZ, they get their tax-exempt status, and then they say, oh, now I have to incorporate. No, if you do that, the forms are filed under penalties of perjury. And you, in your form, you make representations that your corporation already has the governing documents with the required language. And so if you wait until you don't form the charitable organization until after you get your tax-exempt status, then you've, not intentionally, but you've misrepresented the facts to the IRS. And you're going to have to surrender your exemption and reapply. So that's why you're going to want to make sure that you do it in the proper order. Get incorporated, get an employer identification number, get incorporated, adopt your articles of incorporation and bylaws, get a tax-exempt number, your employer identification number, and then file whatever form you want, whether it's the 1023 or the 1023-EZ. And that's the order in which you do it. Now, there are certain organizations who, by their very definition, their very nature, they cannot file the 1023-EZ. That's because they have missions that require extra scrutiny. And it's similar to the list of the people who had to file the separate schedules on the full 1023. Schools, colleges, universities, hospitals, medical and agricultural research organizations, credit counseling services. That's something that the IRS is very important because there's been a lot of abuse in that area. Donor advised funds. If you're selling carbon credits or offsets, supporting organizations, and what those are organizations that exist to support another tax-exempt entity. Charitable risk pools. There are a few others, but those are some of the big ones. You cannot file a 1023-EZ, so you have to go through the the checklist to see whether you in fact qualify. Now, you also, now that you're tax exempt under federal law, you also want to be tax exempt under DC law, and you want to be exempt from the local franchise or state corporate income taxes, as well as sales and use taxes and property taxes. So in most states, if you're exempt under federal law, you're automatically exempt under local law. But that's not the case in DC. In DC, you actually have to file a form FR 164 with the DC Office of Tax and Revenue to get the exemption. And you can file it when you file the 1023, but it won't take effect until your organization has the federal determination, because although you have to file a separate form, the DC government basically piggybacks on the IRS determination. So you can file it at the same time you file the 1023, or you can wait until your organization receives your IRS determination and then you just file the exemption then. And under DC law, it will be retroactive to the federal exemption's effective date. And then you also have to register with the under Form FR 500. I'm sorry. You have to register with the office a combined tax registration and application form for remitting sales tax and the like. Because although you are exempt as an entity from sales tax, if you sell something to somebody else, like you sell T-shirts as a fundraiser, the people who buy the T-shirts are not exempt from sales tax, and you have to collect it and transmit it, just like any other vendor. So you do have to maintain, once you've gotten exempt status, you don't keep it forever. It's granted to you on the provision that you continue to meet the requirements of the Internal Revenue Code. And that is, again, ensuring that the earnings do not go to the benefit of private individuals or private interests. You don't intervene in political campaigns. You don't engage in excessive lobbying. You don't exist for the primary purpose of conducting a trade or business that is not related to your exempt purpose, such as the schools operating a factory. And you say, well, that's actually the case that did it. Someone left the Muller noodle factory to New York University, and they were operating it, and that's what prompted the adoption of this requirement. That you do not have purposes or activities that are illegal or violate public policy. The most famous case there is Bob Jones University. They had policies that banned interracial dating, and as a result, they lost. The case went to the Supreme Court, and the Supreme Court ruled that they could not be tax exempt. And then you must satisfy the annual filing requirements for the Internal Revenue that every organization must meet. And what that is every 501c3 organization must file an information return with the IRS every year. And depending on how much your income is, will determine which form you file. If you gross receipts are normally equal to or less than $50,000, you file a postcard form called the 990N, which is real simple. It's basically, I don't have the form here, sorry. It's real simple. It's just a postcard with 7 or 8 questions, one of which is your name, the second one of which is your address, and the third one is who's filing the form, so you can see it's very simple. For if you're between $200,000 and $500,000, you can file a 990EZ, which is a 4-page form. And then if you're over 200,000, then I'm sorry, if you're between 50,000 and 200,000, you file the EZ. And if you're over 200,000, then you file a 990, which is a 16-page form that asks for a lot more detailed information about your operations, what you're spending your money on, are you paying officers and directors, how are you determining the compensation, and the like. But you must file one of those forms. And if you're a private foundation, you file a 990-PF. You have to file one of those forms every year. And if you go 3 years without filing the form, you will lose automatically your tax-exempt status. And it happens a lot. Every year, thousands and thousands of organizations lose their tax-exempt status because they didn't file their 990. And I'm going to go back just for a second and point out one thing. Remember we talked about how your tax-exempt status would be retroactive if you file within 27 months of the date of incorporation? Because your exemption will be retroactive, contributions made during that period to you would be tax deductible, and you have to file your 990s during that period as if you were going to be exempt. So you filed your application, you formed your corporation in 2017, you filed your application in 2018, you have to start filing your 990s. I have literally seen organizations that get their exemption in May, or they get their exemption in March, and by May they have lost their exempt status because while their application was pending, they didn't file their 990s. So the IRS will actually do that to people. So you have to be careful to file your 990s while your application is pending and every year thereafter. So so that's basically it. That's the importance of maintaining your tax-exempt status. And now we will look to see if we have any questions. Someone asked, will we be able to download the audio? This is being recorded, and we will send you the link. It will be posted, so you will be able to get a copy of the recording. If you need to become a nonprofit in DC, if you already have done so in another state, okay, if you are organized, if you formed a nonprofit in another state, like Maryland, you can file based on your Maryland status, and then when you open it, if you open up to do business in DC, you just register as what's known as a foreign corporation. And in that context, it means foreign to the District of Columbia, not foreign to outside the United States. So what you do is you file based on your incorporation, say in Maryland, you get your tax-exempt status, and then you register as an organization to do business in the district. You don't want to reincorporate, because if you reincorporate, you will have to reapply for exempt status. So there's nothing wrong with being a Maryland corporation doing business in DC. In fact, most public companies, publicly traded companies like IBM, Hewlett-Packard, you name Microsoft, no matter where they're located, they're all incorporated in Delaware. And that's without exception. Just virtually every publicly traded company who's traded in the stock as publicly traded is incorporated in the state of Delaware. And that does not restrict where they operate. And the same is true here. You don't have to be a DC corporation to do business in DC. However, you do have to let the DC government know that you are opening shop. You do want to apply for the DC tax-exempt status. Again, you just file the form, and if you're exempt under federal law, they'll grant you the exemption. And everybody has to, no matter where you're incorporated, you have to register under the Charitable Solicitation of Acts of any state in which you are soliciting donations. So if you're incorporated in Maryland, but you're raising money in DC, you're going to have to register in DC under their Charitable Solicitation Acts. So, and vice versa, if you're incorporated in DC, but you're raising money in Maryland, you're going to have to register under the Charitable Solicitation Act of Maryland. So less about where you're incorporated, more about where you're registered to do business. Okay. Okay, we asked that. Answer that. Okay. Okay. Where do you have to file amended articles of incorporation and bylaws? You don't have to file amended bylaws. You never have to file the bylaws with the DC government. And the IRS used to require that if you amended your bylaws, you had to attach it to your annual tax return, your 990. They don't require that anymore. They just require that you include a summary of any changes that you made to your bylaws on your form. If you amend your articles of incorporation, you have to file the amendment with the DC government. Is another filing fee, $80, and you also have to report the amendment, the substance of the amendment, with the DC on your IRS tax return. So the articles of incorporation have to be refiled with the DC government, just like you can do it online or by mail, just like with the original one. Bylaws don't have to be filed with the DC government, but in either case, if you amend either of them, you're going to have to describe the amendments to the IRS, so they will know that you haven't changed your articles of incorporation or bylaws in a way that's inconsistent with the Internal Revenue Code requirements. And I should add that if you normally would file like a 990N, if you're in a situation where you are changing your articles of incorporation or bylaws, you're going to actually have to file the more extensive return in that year just so that you comply with that requirement. Someone said, do you have to have a dedicated office space or can you operate a nonprofit from home? You can operate a nonprofit from home. That's not a problem. Do you have to file a 990 if you have to start operating, assuming you're waiting for exempt status in pending state? The answer to that question is yes, you do have to file a 990 even if you haven't started operating. You just file the 990N where you certify that you don't have income in excess of $50,000. That's all you're doing. You're not reporting on any activities. You're just saying that whatever activities you, such as they are don't generate $50,000 in gross receipts. So with that, I think that's the last question. Thank you for participating. As I said, before you sign off, if you want to download Starting a Tax-Exempt Entity, the slides are there, as well as a booklet that has more detailed information, and we will send you a survey about the form with a link to the recording. So with that, I want to say thank you and have a great afternoon.